Hey everyone, it's the Realty Queen, and I'm back with my next video in my new series, So You Bought a House, Now What? Last video we talked about home inspections, and today we're going to talk about mortgages and the financing condition. So let's just jump right into it. So first off, before you even started properties hunting, you got a mortgage pre-approval, which basically looked at your credit score, your outstanding debts, and how much income you're making. Now that you've actually found a property and bought it, you need to get what's called a firm approval. So that's basically going to entail the bank verifying the actual income that you stated you're making, as well as looking at the property and making sure that they like the property and think it's worth what you bought it for and are willing to give you the money to proceed with the mortgage. Now the way that's done is through an appraisal, which is very common these days and nothing to be afraid about. There are several different ways that an appraisal is conducted. It can either be done through their evaluation model on their computer. They could also do a drive-by appraisal, which is exactly what it sounds like, or they could do a full appraisal where they actually go inside the property, take some pictures and some measurements, and that lasts about 15 minutes or so. Now in most cases the banks do cover the cost of the appraisal, but there are some instances where it's not covered and it's passed on to the homeowner. So expect to pay, if you do have to pay for an appraisal, around $250. So now that the appraisal's out of the way and your bank's approved you, you're good to go. But if you do have a mortgage where you're putting less than 20% down, which is called a high ratio mortgage, you also have to get a firm approval from the insurer, the mortgage insurance company, which is either CMHC or Genworth. So there are instances where the bank does approve you and the property, but the insurer doesn't. So if CMHC doesn't approve you, you just go to Genworth and hopefully you can get an approval from there. Now once you've got an approval from both entities, then you've gotten yourself a firm approval and you can go ahead and waive your financing condition. Now the last thing I wanted to discuss about the mortgages is also there are instances in an appraisal where the value may come in low. So your option is to get another appraisal, which again, if you're covering, if you are paying the cost, then you'll have to pay the cost again. But if you keep getting appraisal after appraisal and the property value is not coming in what you like, then in order to close on the deal, you're going to have to come up with the shortfall. Now, if you've gotten yourself into a multiple offer scenario where you waived your financing condition and have no choice but to close on the property, then you will have to come up with the difference between what the bank is willing to lend you and the shortfall on top of your down payment. So again, nothing to be afraid of, as it does happen rarely, but it's something to keep in mind. So if you have any questions, please make sure to reach out to me via my blog at realtyqueento.com. You can also ask any questions over on Twitter at realtyqueento. Or us on Facebook at facebook.com/realtyqueentoronto. And make sure to come back here next week where we'll be talking about lawyers, what they're all about, how much they cost, and what do they do. And of course, not to miss a video in the series So You Bought a House, Now What? Make sure you subscribe to my channel. All you have to do is press the button that's floating around. Thanks so much, and we'll see you back here again.